Alrighty, what's up everyone joining us on YouTube and most importantly here in eSquad. How y'all doing today? Yeah, woo, let's get some energy going. All right, so today we're gonna be talking about finance on the blockchain and no one better to help us learn about that than David. David is the former president of Wolverine Blockchain. He created the Matcha DEX, which we'll be talking about, and he was also a big part of the 0x team since what, 2017?
Late 2017, early 2018, yeah.
Awesome. Okay, so just a little bit of primer. Most of the applications we're going to be talking about today are based on the Ethereum blockchain. So Bitcoin is a ledger. It can process transactions, like sends and receiving, basically, right? But you take this ledger, you strap a computer on it, and you record the state of the computer every 15 seconds along with the ledger balances. And this way you can put some code onto that computer to automate and make more complicated transactions that update the ledger in more unique ways. So Ethereum was the first blockchain to launch with a Turing-complete virtual machine attached to it. It's called the EVM, the Ethereum Virtual Machine. And this opened up a whole new world of being able to create and execute code in a decentralized manner on this global open computer that is the Ethereum blockchain. So, smart contracts are kind of a misnomer or like a buzzword because they don't have to be smart, nor do they have to be contracts. But I guess it works for some people. All right, so with the ability to update the ledger in more complicated ways, we were able to program applications that execute on the blockchain. And those applications that are financial products are called decentralized finance, or DeFi for short. Just by a show of hands, who has used a DeFi protocol before? All right, very good. Almost everyone. Sweet. So I guess we won't have to go too much farther into that. Are there any questions about the Ethereum blockchain or decentralized finance or smart contracts in general that we can clear up before we get into the more complicated stuff? Noah.
When optimism.
What's that?
When
optimism. When optimism. David, when optimism?
For what specifically?
When F2, better question.
When what?
F2.
Oh yeah, so that the ETH2 upgrade is, this actually just came out like a couple of days ago. They're not calling it ETH2 anymore. They're calling it like the merge. The change to proof of stake is now the top priority, and increasing the size of the blockchain is being pushed onto the layer 2 networks like Polygon, Arbitrum, Optimism, to name a few. But it should be coming, according to Vitalik, within the next 6 months, if not a little bit sooner than that. But the change to proof of stake, the ETH2 was launched in 2015. So it's been a long time coming. The switch to proof of stake was in the original Ethereum white paper, which I think a lot of people don't realize. All right.
When other layer ones say that they run on the EVM, what does that mean?
Yeah, so a good way to attract liquidity from Ethereum, financial applications, a common thing is to like fork a protocol, basically copy it, make your own version, and then you do like a vampire attack, right? So you offer 10% of your token supply to the first people who provide liquidity to your application, right? So by a blockchain having EVM compatibility or Ethereum compatibility, you can literally just rip the contracts right off of Ethereum, run them natively on that other blockchain, and money and NFTs, the ERC standards, and so on can be ported over natively, right? And we see that a lot of blockchains that, like the alternative layer ones that didn't opt for adding EVM compatibility, Cardano, for example, are doing a whole lot of nothing right now. So it seems that EVM compatibility is quite important. Fun fact, the Ethereum virtual machine and the Solidity programming language that is native to the EVM was created by Gavin Wood, the now founder of Polkadot. But yeah, All right. Any other questions? Jay?
So this is going back to like the Ethereum 2.0 Converge now.
Mhm.
I've heard conflicting reports. I was going to ask David if he thought that this new one will lower the gas fees. I've heard conflicting reports of that.
Yeah. So David, I'll let you answer this in a second, but my take on it is that the switch to proof of stake will not increase the block size. It might make transactions slightly smaller, but the demand will simply increase to match the new supply. So I believe that ETH2 will not have any significant impact on gas fees long term. That's why the push to layer 2 is so important. David, what do you think?
Yeah, I mean, I think you're spot on there. At a technological level, we're not, improving the block size. So demand supply will react, and if it costs today $100 to do it, then maybe proof of stakes just just cheaper to run for a staker than a traditional proof of work miner. That could account for some changes to the market, but conceivably, I don't really like every single time we have a hard fork, we all think gas prices will get down, but I'm so jaded now. It never goes down. It only goes up with more use for the blockchain.
Yep. Any other questions? All right, cool.
Actually,
Go for it.
like, why would a sidechain like Polygon choose not to use Ethereum's security network?
So anything that's in the Ethereum layer 2 ecosystem must have EVM compatibility. The alternative layer ones are the blockchains that have the option to skip it or not. Yeah, makes sense? All right. All right. Next up, David. So you could probably explain your specific background at each of these projects a little bit better than I can. But you started interning as a Michigan student at 0x. You said late 2017. You eventually made your way to Matcha and then Proof of Beauty. So it'd be great if you could just tell us your story, how you got into crypto and how you got to where you are today.
Yeah, happy to. I was kind of joined the wave during the ICO era of Ethereum 2017. Feel like my camera's blurry and I have no clue how to fix this, so I'm gonna see a blurry face today. But yeah, so I joined 2017, and during that ICO era, I made some money, lost some money, blah blah blah, but I was quite, I think, enamored by the smart contract, system, and specifically during the time, the first few companies building DeFi, which was 0x, MakerDAO, Paradex, which is long gone, Gnosis is long gone too, pretty much, and a few other firms then, and we didn't call it DeFi then. We didn't really know what to call it. It was just this vision of tokens moving around in a on a ledger. So I kind of like thought that kind of vision of what blockchain can do was really powerful. So I made a pretty quick decision. After losing a lot of money, is like, instead of trying to recoup my losses, I think maybe finding a career here is a more positive step towards reconciling my relationship with crypto. So I looked for a place that would take me as an intern, and that happened to be 0x Protocol, which is one of the many modern day decentralized exchange DEX, allowing you to move money between wallet to wallet, unlike Coinbase where they hold your money. So I was there for quite a while, and within 0x, they decided to create a consumer-facing product for the protocol, effectively, creating a nice looking UI in front of a DEX. And I was eventually brought onto that team to work on that specific project, which is called Matcha. You can find that on matcha.xyz. And so I was working on that for quite a while before I left to build NFTs for full time. So I currently I am a co-founder of a NFT studio called Proof of Beauty, and we create just crazy, weird, wacky NFT projects that are non-traditional, but I still have a lot of my roots in DeFi, because that's where, I was effectively raised in crypto. So yeah.
Awesome. Thanks for sharing that. Does anyone have any questions about David's experiences?
Did you know Solidity before you got your internship at Matcha or at 0x?
Yes. And I think that circumstantially it's a lot more different now than what it is today. I think before, when I was trying to get an internship, there was quite literally 2 companies that were willing to offer internships formally. And that was like Coinbase and Consensus. And 0x didn't really want an intern. So so it was definitely a different world then, but I did make an NFT project before I joined 0x. That was like my way of learning how to write Solidity, and stuff like that. But I was not hired or brought on to 0x to write Solidity. I never wrote a single line of Solidity for the team. I wrote, front end and TypeScript stuff. I wrote infrastructure around the Solidity code that a protocol engineer would write. So the knowledge definitely helped. And, now that I run my own studio, I write a lot of Solidity every day today, but during my tenure at 0x, that's not the case. I didn't write any, but I definitely think, showing that passion during the 2018, winter definitely, pushed them to give me a chance to join them.
David, what percentage would you say of, I guess the we could say 0x, because you'll probably have the best answer, but it's a little bit niche. But what percentage of most Web3 projects that are out there these days are written in Solidity? And then what percentage is other languages?
I mean, there's only Solidity and Viper if you're talking EVM based. Solana has Rust. Cardano, I have no freaking clue what the hell they're doing beyond just trying to keep their thing together. So in that case, I do know that 2 years ago, Viper was kind of cool, and Uniswap v1 was written in Viper, which is like a Python flavored version of Solidity. But Solidity is really the dominant one now, and I can't imagine anything else not being written in Solidity, just because the amount of sheer security engineering that has been put into that language to make it safer and safer. Because before there were so many random little bugs that you had to be mindful of. You're like, could be a integer overflow, could be that, could be this, but now it's fairly safe. The language can catch a lot of these errors, which I don't know if Viper can do, but it's kind of like aggregation of knowledge and institutional knowledge all came around Solidity, so there was no reason to leave it. So at this point, unless you're a real EVM junkie, you're writing in opcodes and assembly code, which I don't advise you to do in any way unless you really know what you're doing. You're using Solidity at this point.
Pretty cool. All right, let's talk about DEXs. So maybe, I guess I'll just let you, decide how you want to bring up the topic. But obviously, Coinbase is like a centralized exchange, and like Uniswap and SushiSwap are decentralized exchanges that are based on the blockchain. So, David, what are the advantages of having a decentralized exchange?
I mean, advantage-wise, it's probably the fastest go-to-market any project has, right? For one, it's global market access. Anybody who has a wallet can access a DEX, and that means effectively your token has access to the global, world market in that sense, and that's very, very powerful. Mm-hmm. And two is most of these tokens, unlike 2017 or 2018, or even you can even argue like Bitcoin, their value is in its ability to be used, right? It's utility tokens or governance tokens. So, putting them in a centralized exchange makes a little bit of a hard, justification, because you're like, well, I'm now limited to what I can do with this token, right? I can't, use other DeFi projects. I can't, vote with it. I can't, stake it in their system, right? So decentralized exchanges allow you to stay within the very environment that this token is created. So you're staying in that that native state. And that's very, very powerful. I think 2018, 2017, when DEXs just started to build, that case was not very clear to us. We're like, why don't we just use a centralized exchange? The liquidity is just better. The prices are better, right? But we're even at a point now where for certain markets, due to just how specialized these automatic market makers like Uniswap are designed, or even like 0x protocol is designed, that the prices are actually in certain sizes of buys, let's just say like $10,000 of USDC, those are actually much more competitive on a DEX now because of its ability to pool, decentralized capital, not just Coinbase, working, legal contracts with market makers one by one, right? And that kind of scale, we're finally kind of seeing that scale kick in hard, even though we are limited by the gas price and the gas block, the block size, TPS, whatever. It's actually really impressive that, we're getting really good prices, and also the ability to, have sovereign control of how do we use these tokens to do all the wacky stuff that DeFi is allowing to happen, right? So
yeah, I think a great example of your quickest to market statement is looks rare, right? So this is the OpenSea NFT market competitor that came out just recently, and it's not listed on any exchanges, any centralized exchanges like Coinbase or Binance. So when it came out, the only way that people could create a market for it to buy and sell it was by adding it to a decentralized exchange. Because the token is natively Ethereum based, just like all of the other ERC20 tokens, anything that has an Ethereum address, you can throw it into Uniswap and trade into it, given that there's liquidity. So maybe we could talk about the other side, on LPing, but it's kind of a deep topic. So if we don't want to, then we shouldn't. But are you guys interested in how the market is made by the just community at large? Okay, yeah, we'll talk about it for a second. So here we can see all of the pools on Uniswap. These are all of the token pairs, and then you see this percentage right here. So say you want to add liquidity to, I don't know, we'll just take USDC ETH. So you can connect your wallet and add liquidity just like this. You will earn 0.3% of all of the volume that you provide the liquidity for, right? So this is the incentive. By becoming a liquidity provider, you can earn the trading fees for the trades you facilitate. What's cool about Uniswap v3 is that you can concentrate your liquidity within a specific price range. And this allows you to take a very small amount of capital and get an insane amount of yield compared to the traditional markets where you have to provide liquidity over the entire price curve, right? Despite the fact that nobody's trading Ethereum for $1, you would still be forced to provide liquidity there, right? Whereas right now, you can provide it between, Ethereum is $2,000 and $3,000. So all the time that it's in that range, you're going to be earning the trading fees. And so this is just increases capital efficiency exponentially by orders of magnitude. What's the question?
So why is there any liquidity at a lower price? Wouldn't everyone just provide liquidity at the base price now and then the higher price at another point?
Yeah, so that's a great question. So say that I want to sell my ETH between $8,000 and $12,000. I predict it's going to be there later this year. I can provide liquidity on the ETH USDC pair, only adding ETH because it's out of the current price range, right? So that way, as ETH moves from 8 to 12,000, it will sell it off constantly. So you can also use it as a way to exit your position. Yeah, David, is there any other reason?
Yes, please.
I didn't catch the question. What was it?
It's why would you provide liquidity outside of the current range?
Well, if it does hit that range, you also get a larger share of the 3.3% because there is a lot less liquidity at that point, but you would get a larger lion's share of that.
Yeah.
There's more what do you call it? I guess transparent concerns where some people just we need to provide liquidity, period, just because it's a public good. But obviously, I think a more selfish person would targeted price ranges. And I do know that Uniswap v3 has some weird math that incentivizes some folks to take some more extreme positions. But
Yeah.
you're right.
So one thing to be careful with when doing this, I had like a couple thousand mana tokens from Decentraland that I bought for like 15 cents each, right? And so I was just LPing them, trying to earn some fees, and then mana did like a 10x in its ETH price, right? So at that point, I had 0 mana left, and I missed out on all of those gains. So even now, it's below my trading range. So that position is currently all in ETH. Should mana come back down into that range, I'll be able to start getting mana again. But for the most part, I missed out on a lot of those gains, which is, I believe, what they call impermanent loss.
Yes. Yeah, that is one of the most complex calculus that you have to figure out about LPing is when you put in money, the ratios are not, what you put it in as, right? So how does that calculate to how you exit your position, to opportunity cost? Like if I just hold 100% mana, or should I get 50% WETH and then 50% mana, like in 2 months, which one would price perform better? There's a lot of this calculus that I don't think, for a while we didn't really quite understand what exactly is a better opportunity cost, right? So I would argue that that's still a very careful thing, and without yield farming, I don't think LPing could have exploded in the way that it has during DeFi summer.
David, so Uniswap just launched on Polygon, which means that you can adjust the range of your LP position for basically 0 gas fees. So wouldn't it be like insanely stupidly profitable to just make a quant strategy that automatically resets your liquidity like $1 around the current trading price at all times?
Well, the fact that you're thinking about it, there's somebody else thinking about it. So,
Sure.
At the end of the day, that's what you're effectively conceptualizing around modern market making in the more centralized context, right? Like this is what market making is at Coinbase, at NASDAQ, which is, taking these price ranges and adjusting them at hyper fast frequencies to whatever the price range is, right? So if you're doing this in a public context where the mempool or your transaction, your intent to do that price change is public, you're just from my experience is, when if you're using like to kind of give some context, on 0x, there's traditional market makers that does that kind of price ranging math every like millisecond. The key difference in that sense is they're not publicly telling the world what my price range is. They keep it internally because it's a server that they're running, right? But in the context of Uniswap, you need to put those numbers on chain that my price range is this and this, right? And that information reveal could be very, very detrimental if somebody snipes that and can effectively do a sandwich attack where they slide in transactions right before and after your transaction that edits the price range happens. So I think yes, assuming you're sophisticated enough to do it, but like if you're going to quant like that at that point, you should just be doing it in a more centralized context where you're just quanting over like keeping those numbers private and then doing it in an externalized manner. But
there goes all my hopes and dreams. Thanks for that.
I was just wondering what you thought of companies like Popsicle Finance and like Gamma that kind of are V3 like optimizers, and you just kind of put in liquidity and then they do that range for you and kind of keep it within a tight range.
David, are you able to hear that?
I think you're talking about like DeFi optimization protocols.
Yeah.
Yeah. So I mean, obviously, I worked on a DeFi optimization project called Matcha, which took 50 plus dexes, and if you said buy 1,000 USDC with ETH, we would route the prices to all those 50 dexes and find you precisely how you can get it the best price. So yes, I mean I'm pretty bullish on those kind of technologies, and I think those are the future of DEX as a system in general, because it's so complicated that we need to build, I guess, software abstractions on top of them, and Matcha is very much so one of them. The big thing for me on these things is if you're chasing yield, you are undertaking some amount of systems risk, right? If you were to assess this at, there's credit risk, there's systems risk, there's, other kinds of, related risk to your position. Um, simplicity always means less systems risks, right? If you're using compound directly to chase a yield, that means that only compound can fail and you lose your money, whereas things like Wi-Fi or Popsicle or other systems are a lot more complex and there's more mechanical systems. So to that, it's more of a matter of like, where do you sit with your understanding of these systems? And two is, are you, how risk averse are you, right? Like if I had 1,000 of ETH and my main goal is to not lose 1,000 ETH, but earn maybe a 1 to 2% yield on top of that, it's much safer for me just to put it in compound directly, right? Because I don't want to have a black swan event ever in 10 years where I lose that money, right? Like you want to be safe. But if you're saying like, no, I have only 10,000 USDC and I want to, I want to milk the living crap out of those, those dollars, right? Then being a little bit more risk averse, risk sensitive, risk happy. I don't know, like it makes more sense there. And using these yield optimization protocols could be the way to do it if you want to be a lot more off hands. And there's things like Rary Capital. There's other Wi-Fi being one of the more famous ones. Those are very powerful. But again, it's a matter of risk profiling there because you're adding a lot more systematic systems that could be very complex and something that can result in failures, right?
You're
as we
telling
don't
me
understand the game thread.
yield is not reasonable or safe?
I'm sorry?
You're telling me that 10,000% yield is not sustainable or safe?
Well, considering my portfolio performance when I chased those things, it didn't work out for me long term. There's just so much manipulation you can do with those 10,000% APYs. It's like, or even like above 1,000%. There's a lot of price pumping, and how it's done is in such a cyclical manner. The amount of stories I've heard from like Iron Finance on Polygon to other things where there was a lot what we call a rug pull, right? Like you can financially effectively hack your token price and remove yourself from the system when it's profitable in a very community negative way, i.e. the rug pull. There's so many things that that would keep you sleepless at night. And if you're interested in those stuff, I have power to you. That's I've done my share of that, and I've lost my share of money because of that. So my more focus is being a little bit more on the productive side and just building things. That's my perspective.
I think that's really good advice. So speaking of things that keep people up at night, the interest rates on decentralized lending protocols like Aave are making traditional bank accounts and financial products irrelevant very, very quickly. So David, you want to give us just an overview of decentralized lending while I pull up Aave?
Yeah. I mean, decentralized lending is just conceptually the idea that of like, how do we pool capital in a way that instead of buying and selling it, where we're attempting to effectively create, it depends on what language you want to call it, but like if you read Compound's white paper, they're effectively implying money markets, effectively pools of capital that you can put in and then remove other capital from other pools, and instead of buying and selling, you're keeping effectively a debt position with them, right? And so this effectively enables decentralized margin, right? Decentralized shorting, decentralized longing very, very easily, right? So they're kind of like the automatic market makers, but automatic lending protocols is, I guess some people would even call them. But you put in $100,000 or whatever that enables you to borrow 75% of that value in something else. So you can put 100,000 ETH, you can borrow 75,000 USDC, and then you can you can use that 75,000 USDC, buy $75,000 worth of ETH, put that back in Compound, borrow 50,000 USDC, sell it again, put that back in, and then you can do that a few times, and effectively you margined, you put a long position on ETH, right? And you didn't do that with your credit score. You didn't do that by telling Coinbase like I'm rich and I'm responsible, right? Like you didn't have to ask for permission there, and you could do the same in reverse to short positions. You can also, for a lot of folks that I do know of, is we hold a lot of ETH that we got years ago. Every time you sell it, it's a capital gains event, tax event. But an advantage you can also achieve with Compound Protocol or Aave is you put it in there, and you can borrow USDC, and that borrowing USDC is not a taxable event. So you're effectively, being able to get, utility out of, credit out of your debiting assets, right? So also there's, the yield farming game. There's so much things to play with it, but at this point, I don't think the yield is, at least for some of these more stable protocols, the most enamoring part. At least I know that Compound doesn't give too much anymore as it's stabilizing again. But like if you're giving out USDC, that's like 6 to 8%. If I remember last time, but like these kind of like you have trading protocols with AMMs, and then you have lending protocols. Those are the superpower. That's how you get, that's DeFi to me, right? Like is I can have an intent to make money. The AMM allows me to make money, and the lending protocol lets me to take my intent and make it more passionate, and make more money if I'm right. So those two are the magic formula for Wall Street's bets, right? So
does anybody have any questions on decentralized lending protocols? All right, cool. We will keep moving forward then. So next up, let's talk about on-chain organizations. I saw somebody recommend on Twitter that instead of calling everything a DAO, they're often not decentralized. For example, there's a couple of us in the MDAO that can swing any vote, right? So it's not really that decentralized yet. So for the time being, a more appropriate name would be something like an on-chain organization. This would just be the umbrella term. And I'm going to run with it. So yeah, so there are a lot of things that you can do with on-chain applications or on-chain organizations like DAO structures, for example. It's basically whatever you want to do, right? The DAO formed to buy the Constitution, raised a ton of money in like a couple days. There are art collecting DAOs. There are metaverse fashion DAOs. There are guilds within PvP, play to earn games, where you can basically form a guild, have people join it as like a DAO, and then you make decisions on how you want your team to execute on certain types of things. It's truly up to your creativity what DAOs can do, and there'll probably be more applications possible like each and every day. Yeah, David, do you have any thoughts on the current state of on-chain organizations, DAOs, their failure to cooperate, their successes to cooperate?
I mean, DAOs kind of feel like NFTs 2 years ago before it blew up. The tools are not too great. We're kind of scrambling around trying to find what DAOs can really enable, and there are and / have been very successful DAOs like FWB, Flamingo DAO, Nouns DAO. You would even argue, but if you look at the innovation of or the progress of crypto and specifically Ethereum, DAOs is just like a natural next step. It makes a lot of sense when you have finance systems enabled, and it's like, well, why don't we just take 4 people and put them together and do something together with shared money, right? And then hence the DAO, right? So it's very easy, I think, to take that extra step. So we're all still figuring it out, and I'm dealing quite a bit with how do you organize and structure DAOs to be productive and successful. But yeah, it's on-chain organizations, they're fundamentally still just humans working together. That's just the bank account is in WETH or ETH or in some other shitcoin, right? So the nuances there is that.
David, you have a couple DAOs yourself built around the Proof of Beauty project, the London DAO and the Historians DAO. Those are separate,
Yeah.
right?
Yes.
So what's the purpose of each of those?
Yeah, so London DAO in part is kind of the main steward of the London project that we created, and it has its own treasury of funds to kind of like keep up with any more work it wants to do. It deploys money to fund other artists to do stuff. So they have about 400,000 USD. I don't know what the current price is with ETH is. That would reflect on whatever it is. But yeah, so you hit proceed anyway on their webpage. I can't figure out why that's the problem, but yeah, so London DAO is just kind of a collective of folks who are passionate about art and crypto focused art, and they're finding ways to support that. And they, it's its own community. It has its own processes, and obviously I'm a part of it because it's based on a Proof of Beauty project as a studio. And then yeah, so that's London side, right? And on the historian side, which I don't know if there's a lot of great. I mean, we're working right now as we speak on the new Historians DAO and all the work we're putting onto it. But Historians DAO is really just a collective of folks that are passionate about keeping the history intact of what Ethereum is and what's happening in Ethereum. So it's almost like a professional organization where it's like the bar association or like whatever, where it's a group of folks working together to keep the accuracy of how we interpret Ethereum history. So they're kind of like the archaeologists. They're keeping primary source documents and everything. So that has like a different problem, right? You're not just creating a grant system, right? You're just figuring out how do we get work done professionally, right? Or not professional, like work done in a positive way. So Historians DAO has a different problem, and that's the more complicated. That's something that I literally spent I guess an hour before this call, I was chatting with the other guys at the studio and figuring out what exactly we want to build features wise to enable the Historians DAO to be very successful. And that is just an open problem. We don't have an answer, and we're working very hard to think of what could be the best answer, right? And I think within this year, I think as a space, we'll learn what DAOs can do, right? But long time coming.
So my last slide before we just do open questions is decentralized history. So shill Proof of Beauty for us, please.
Yeah, I mean, Proof of Beauty Studios is a NFT experimental studio that I founded about a year ago. About a year ago formally. But as a studio, we're just interested in building NFT projects that are really culturally impactful, that are not just a PFP. It's something that can be something more, right? And so to that, our first project is called Hash, and Hash is about how do we capture Ethereum history in the form of art and culture. So every interaction of the blockchain is a transaction. So we take a transaction and allow you to turn it into a piece of art, and also write what happened in this transaction. So that would be an OpenSea transaction because of the colors. So that would be a great way for you just to capture your experience with the blockchain in something visual and something that is just different than just rows of data, right? So that's what Hash is, and we're really about how do we tell that story. And if you scroll down, you can even see on the right column is we have what we call add-on content in the very bottom. So if you scroll down a little bit more, you see these are ways of us kind of giving more context of the story held in this NFT, right? So we are probably one, if not the only, decentralized history-focused NFT projects out there. We've had a very strong community. We also put one of these on a wall in Australia somewhere. We have a whole mural going on, so that was very fun. But yeah, so it's just about history collecting, and then we created another project called London. London was this whole crazy thing about the whole hard fork that happened half a year ago. So that was a whole spiel. And then, yeah, so that's our big two core projects. We have a lot more things we're working on behind the scenes, but as a studio, we're just interested in creating things that could push the narrative of what blockchains can be, and what NFTs can be at a cultural level, at a technical level, at an artistic level. So yeah, that's what we do as a studio, and these are our two main projects that we have created, and they're both history related. So they're both about celebrating, the blockchain as it is.
Awesome. All right. I just want to open it up to you guys. Fire away questions for David.
Yeah. So there appear to be quite a few generative art and generative schemes for NFTs right now. Do you have any sort of like far-reaching ambition for generative art or generative NFT schemes beyond that of history, beyond that of just art?
I didn't catch the second half.
You say that again?
Just tell me what you think about generative NFTs and generative art in general.
I mean, personally, I've always loved generative art. I've done it for years. That's just at a personal level, I have a deep affection to that kind of style of art. And before I built NFTs, I was doing generative art. So obviously, there's kind of like a nice match there. But the key thing with generative art that is very powerful is it allows artistic expression to be scaled, right? Instead of a human having to produce something all the time, you can create rules that produce art. And that allows us to do things like hash, right? Where you can have history expressed in digital art. And that in itself, art blocks had its own craze, and generative systems are the very reason why PFPs are possible, right? Interchanging layers of systems. So in general, it's a powerful tool, and I do think that modern NFT space has just not pushed it hard enough as like a conceptual tool to produce ideas, both artistic and cultural, and also investable, I think. So yeah, I mean, there is some really cool projects that are really interesting in how they push expression of art with NFT systems, and those I think are really doing some cool stuff. But like, yeah, like as much as like I think people are like PFPs are bad or whatever, I think they are just a deviant expression of generative system, generative art, and we at Proof of Beauty just happen to be on the other camp of how do we utilize these tools, right? And then there's obviously the art blocks, which is a lot more simple in nature. It's just cool art, you can buy, and so that's a whole different kind of expression. But we really see it as a means to an end to communicate the ideas that we have. So I don't know if that answered anything.
Yeah, that was great. David, what would you say to anyone who's, kind of on the fence about their career? Do you think that Web3 is a risky career choice, or would you encourage it? What are your thoughts?
I mean, in 2018, I didn't think it was risky. 2017, I didn't think it was risky. It's just at the time it was harder to get in, but I just think that, and I say this in a very privileged position, that this space, beyond the public image that it gets a bad rap, is full of very talented folks. It's very passionate, and you're genuinely doing stuff that I don't think a lot of people can even dare to ask the question about. And just because of that alone, I have a hard time thinking that you can't find a career in this space, especially now that there's so much VC capital pouring in and translating into jobs. If you want to, like, I feel like, if you want a career, get a career now, right? Like, this is post, the whatever price ranges, stake yourself in the system, build up your reputation here, and it goes very far. Like I mean, like we like all of us who left ZeroX, we have a ZeroX Mafia chat that all of us who left ZeroX are in, and considering what people are doing now. Some of my peers have co-founded the Phantom Wallet team. Some are in some very big VCs. Some other folks are starting their own companies. Some other folks are, like very high level in other positions. And I'm gonna be honest with you, is like in 2017, 2018, when DeFi wasn't even a thing, we were all kind of twiddling our thumbs. We're like, what in the hell are we doing, right? Like, but I think there was still a faith, a confidence that just very cool miracle of a system that we all fell in love with will innovate and push forward. It's just a matter of time. So I so strongly feel like that, where there's just so many open questions and problems that we're trying to solve. The opportunities are huge, and this is the place. Both financially, you're going to get pretty rich if you just stay in here long enough. Like, I'll be genuinely surprised if you don't make money financially, just because you'll be in a place where people are finding ways to create value every day. And value translates into tangible value very easily in crypto, right? Because everything would be tokenized in some expression. So to that, it's less even about career making. It's about, like, how do you stay in here and, do the things that you enjoy, right? Like, I think a lot of folks are like, I don't even know if they're retired or not, but like they're working in a few DAOs for fun, and that keeps them alive. And obviously, I'm certain that they have a lot of ETH sitting somewhere that is also paying for their new Aston Martin car or whatever. So I'm very bullish that crypto's only going to go one way, and we're going to have a lot of struggles, but I think the struggles and the pushback are, if not a great signal that this space has a lot to say, and that we just have to keep, figuring out what the best answers are. And we are desperately in need of human resources. We just need human capital as a space. There's not a single company I know of that is not hiring, right? So, yeah. And so if you want a career, like, you should, start yesterday, right? Like, it's, this space, is absolutely apeshit crazy. And I'm hearing more of my peers, like from when I graduated with, are getting crypto pilled, Web3 pilled, and they're just kind of realizing just the intellectual freedom they have in the space. And I think that's very powerful for a lot of folks. And it's well paying. It's a tech job, right? Like, like your base salary won't be bad, and then who knows, you get a token that can 1,000x as your equity, right? So,
Yep.
Financially, intellectually, it's fairly rich.
All right, we got another question.
Yeah, so you spoke about how, like, when you were searching for your first internship, DeFi wasn't really a term. So how did you go about finding, like, an internship in the space, and how would you go about it now?
Yeah, so I mean, at the time, I literally just asked every person I could. I went to every hackathon I could, and asked every company. It's like, hey, are you going to take an intern? Most said no. I got very lucky that ZeroX was just like, well, we'll do an interview, and then that materialized into a job and a career. But now, if you were to say to a lot of these organizations, if you have internships, most of them do now, like, because they're all of certain size, and you can join even places like Coinbase with some certain teams that are very Web3 focused. There's a lot of big companies like Aave now. It's a huge system of, like, small teams building really cool projects. Like, we all kind of call them the Web3 Google. Aave is like the Web3 Google, where there's a lot of cool stuff working on. So there are all these places now that just is in a world where they need to train up the next generation. So they're obviously open to internships. But also, too, is if you want to really start your career in this space, it's like, because we have DAOs, it's like, honestly, your achievable goal shouldn't be getting an internship. It's almost like, can I do something productive for a DAO and get paid, right? Or for any entity, right? And I think a lot of the folks were just like very can-do. They were like, yeah, we built this tool, and this DAO kind of liked it. They gave a grant funding, and who knows, that either becomes your job and becomes your company that you founded, or it just becomes something on the side that, eventually leads into maybe you joining a team in a much stronger position or whatever. But like, the idea of work is very malleable in crypto. You're not getting an internship anymore. You're just finding places to work. There's places to work, right? So if you find a community you like, DAOs or specifically anything, they all have ways of needing to get things done. And that's that kind of expertise that you're building, that network that you grow from there, will lead you to your next steps really easily. So you can play the more traditional route and join Coinbase, become a PM on their pro exchange team, and actually fucking fix that thing, or you can go join Spice DAO and buy the Dune book again or whatever. So the range is there.
Yeah, I couldn't agree more, David. Like there's so much opportunity. It's like everyone is hiring, like you said. When I look around, it seems like the jobs belong to the people that take them. So yeah, do with that what you will. And if you want help getting started, please reach out. Like, be more than happy to get you connected with the right people.
Yeah, I mean, like on my side, we have grown our team by we had our first full-time hire, but we all are not like very externally saying we're hiring people. But if you're really inclined and really passionate about what we are doing at Proof of Beauty Studios, you can always reach out to me on my Twitter at Dave4506, and we can chat a little bit about if maybe Proof of Beauty, there's something you can do and something that you want to be passionate about there. But this is not me asking to hire. It's more just like, I know that for a lot of folks, Proof of Beauty is like a really interesting opportunity, like kind of place that you can do art and technology in the same place. So if that's interesting to you, let me know.
Awesome. Hey, David, I got dibs on that Proof of Beauty job. But we're getting kicked out of our room right now, so thank you so much. Guys, can we get a round of applause for David?
Yay.
All right, we'll talk to you soon, okay?
All right, please buy Ethereum on